Ladies and gentlemen, Greg Mikulowski from ForexLive.com. Today's date is November 3rd, 2023. It is Friday, TGIF to you. It is the start of a new trading day. And to do that, I'm going to kickstart your trading day by taking a look at three other major currency pairs, the euro versus US dollar, the dollar versus yen, and the sterling versus US dollar from a technical perspective. So let's get started. We'll look at the euro versus US dollar. This is the hourly chart. And this week we've seen a lot of volatility, that's for sure. The initial move was to the upside, where we found resistance up near the swing highs through here and swing lows through here between the 1.0674 and 77. So that reestablished that area, and then on Tuesday, we fell sharply. On Wednesday, we continued to fall to the downside. In the process, we fell below the low of this swing area right through here, where we had, again, a number of different swing levels through here, 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 and here, and here, and here, and here, and once again, here, 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 and even here before we broke below that level and failed. So you can see that was a bit of a disappointment. And on Wednesday, we moved higher. On Thursday, we moved higher. And on Thursday, we moved back to the downside. And where did we go? We went right to this swing area between the 106.08 and 106.16 level. I've talked about that area for a long time. In fact, if you go back in time to these levels through here, where we had a swing low, and then we use that level as resistance through here, here, and here, and then got a little messy there, and then reestablished the area through here before moving to the upside, and then fell below it and tried to stay below the level here, got messy, and again, trading this week. But in trading here today, what did we do? We found support, or trading on Thursday, we found support right against the 1.0608 level, and we have since been able to stay above that level. In the new trading day, we're going to need to get below that level to increase the bearish buys. If we do, then we look toward the 100 and 200 hour moving averages. That's a blue and green line in this chart. They're both converged. Each of those moving averages come in at the 1.0589 level. That would be the neutralist level for the euro versus US dollar, and pretty much dissect the trading range for the week. And also, what is by definition, the last 100 bars and 200 bar, the averages, when both those moving averages come together, I call it three's a crowd, and the market tends to move away from that. It also is indicative of a non-trending market, and that's what we're seeing in the euro versus US dollar. Lots of ups and downs with most of the price action probably within this box right here. Yes, we had move above, move above, move above, and moves below through here. More above than below. Are we trading more ticks above or below those moving averages? You make the call. But you can see the price action is not trending. It's going more sideways. And that is indicative of a non-trending market, and why that 100 and 200 day moving or hour moving averages are converged. Now let's look at the daily chart, and what we can see in the month of October is indeed a lot of up and down trading in a very fairly narrow trading range. Remember the 106.08 to 816 level? Well, that level also corresponds with the broken the 38.2% retracement of the move up from the September 2022 low to the July 2023 high. That level comes in at 1.06106, right in between that swing area that we saw on the hourly chart. So there's all the reason why that area should is a level where the market returns to, and that's where we return to right now. On the top side, we're going to need to get above 1.0631 to 39 to increase the bullish bias, and we'll try again to, if we get above those levels, we'll try again to extend the trading range like we did here, here, and here. But each of those times the market was, stayed above it, moved above it, had some success on the break above it, but then couldn't sustain the momentum, and we fell below it here and fell below it here. And in the move below here, so far the range has been somewhat narrow. So I guess we give it a little bit more of a bullish bias, the fact that this is only a small correction where these other ones were pretty big. So get above the 1.06395 would be more bullish for the euro versus US dollar. Let's take a look at the dollar versus yen. And this currency pair also had its share of volatility in trading this week. We initially moved to the downside, falling down to away from the 100 and 200 hour moving averages, blue and green line through here, and heading down to 148.79. That was moving away from the 150 level, and then we started this rotation back to the upside. This is the 150 area right through here. We got above that level, and then we moved above the also above the 150.15 level right through here. That was a high going back to early October, and we surged the upside on Tuesday's trade, and then on Wednesday we started to come down. Thursday we continued its move to the downside, getting back below the 150 level, getting back below the 150.15 level in the process as well, and also below the 100 and 200 hour moving averages. And guess what? The seller should have taken control on the break of this trend line, the moving average break of the old 150.15 and 150.50 level. But they couldn't do that and rotated back to the upside, and now we're trading back above the 100-hour moving average at 150.36. Guess what? We got to stay above that level, got to stay above the 200-hour moving average, got to stay above the 150.15 level and the 150 level. All those levels are in play in the new trading day, and would be potential support levels on a downside move. But they also could be potential could hold a level above. And right now, the last 6 or so trading hours has seen the price stay above the 100-hour moving average. If we can do that, we need to get above the 38.2% retracement. We couldn't get above it here. So get above that 150.59 level, and then get above this high at 150.77. And the hope springs eternal that that leads to more upside momentum in this pair, and happy days ahead to the upside. Conversely, break below those levels, and things start to look more bearish for the dollar versus yen. Finally, let's take a look at the sterling versus US dollar. And in trading on Thursday, moved higher and then moved lower, and then moved higher and to a new high. Got within this swing area right here, and then back down to another swing area down here, and now back up. So, is it easy enough to say that the resistance in the new trading day is up here, and the support is down here, maybe inclusive of the converged 100 and 200 hour moving averages? I'd say so. And in between, we sit in more neutral area as the price decides which way it wants to go for this currency pair. And in trading with us this week, we're seeing certainly a number of ups and downs in trading, as you can easily see. Through here and 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 here. But what we can see more recently is the price holding above the 100 and 200 hour moving averages. That's what it did in the dip yesterday. So buyers are more in control in this currency pair. They just need to prove that they can take the price higher and just keep it going higher. So there you have it, a kickstart to your trading day with a look at 3 of the major currency pairs. My name is Greg Michaelowski. Good fortune with your trading. Bye-bye now.